Today we are looking at Discovery Inc., ticker symbol DISCA. What I'm going to be doing is looking at the fundamentals of the stock, then using discounted free cash flow and the Buffett-Graham intrinsic value calculation models to give my fair value of the company to see if it's still a buy. Now, the interesting thing about Discovery is this time a year ago, or not a year ago, in March, it was at $76 a share and went all the way down to around about $21 a share, but has now had a pretty big upswing over the last couple of weeks and is currently sitting at 28. So the question is, should you buy this on this upswing? Now, if we just go to the last month, you can see this stock has had a pretty good rally since the 1st of November, but we're going to go look into that, see the fair value. Is it still undervalued at this point? And then we're going to have a look at some technicals to see if you want to trade it in the short term. So let's have a look at Discovery. But before we do that, can you please give a like on the video and let's get on with it. So this is Discovery Communications Inc., ticker symbol DISCA. It has a market cap around about $14 billion and it's in the communication services sector. Current share price $28, as I said, 52-week low of $21 and a 52-week high of $78 a share. So hopefully if you did hold this, you sold when it was at the peak and you didn't buy at the peak because you would have lost a lot of money at that. It does not currently pay a dividend, but let's have a look at the steps. So is the PE ratio less than the market? It has a very low PE ratio of 15.6, which is obviously lower than the market's 28. So that is a good pass there. Is the revenue increasing? Yes, but not massively. It's gone from 10.5 billion to just under 12 billion. So it is increasing, but not massively over the last 4 to 5 years. Next is the profit increasing. Yes, they've managed to get a lot more profit out of that extra revenue increase, 429 million to 1.2 billion. So revenue has only increased by 1.2 billion and profits almost increased by that. So the ratio is they have been able to get a lot more profit out of their revenue. Next, are they buying back their shares or issuing new ones? Unfortunately, they are issuing new ones, not massively, but 498 million to 505 million. Hopefully these shares were issued at the time when the stock price was at its highest, so then they wouldn't have to take on more debt, but still, it's a negative, but not massively. And finally, is the free cash flow increasing? No, it is not. 2.4 billion to just over 2. So that is a fail. 2 fails at the end there, which gives this a 3 passes and 2 failures. But the positive is, even with that decreasing free cash flow, with only 2 billion of free cash flow and the total market cap is 14 billion, that gives a free cash flow ratio of around about 7, which is very, very, very low, much lower than, for example, AT&T or its other competitors. That is a good sign. So I'm guessing discounted free cash flow is going to really like this stock. So as I said before, please give a like on the video and let's head on to the fair value. Oh, and subscribe if you're not already subscribed. I've got a lot of new viewers, so it'd be good if you're subscribed so I can bring you new stocks. Anyway, here we have discounted free cash flow model based on the formulas above. What we've done is we've calculated the future free cash flows. Now you can see it was increasing and then decreasing. So we have been a little bit more negative on the, or a little bit more bearish on the discounted free cash flow models. We've calculated terminal value of the company, and then what is that worth today? So with you can see that discounted free cash flow absolutely loves the stock. Calculated stock price around $88 a share, which is a 213% discount. That seems very, very high to me, but it just shows that this company has massive free cash flow despite its size. I mean, if you're paying $14 billion for a company and they have $2 billion in free cash flow, that's pretty darn good. But what is the future growth of this company? And that's why I like to look at the Buffett-Graham intrinsic value. Analysts are thinking this has got a 5-year growth rate of around about 6.83%. Earnings per share, which is 1.87. This isn't actually trailing 12 months. Well, let me just update that now because I'm using Google Finance. So this isn't the trailing 12 months. This is the just the earnings per share at this point. So what does the Buffett-Graham intrinsic value say? Well, it looks like a buy on that front as well. Fair value of $41 a share, which is obviously a lot lower than the calculated stock price of discounted free cash flow. But the Graham price, which is kind of a safety net price, which you want to buy it at, that is $31.08 a share. So a buy on both fronts on the models, which is good to see if you're interested in the stock. It seems that this stock does have some more growing room. Right, let's have a look at the technicals of the stock now. So I've got the stock price over the last year. We've got a 50-day in green, a 100-day in yellow and a 200-day in red. And what we want to see is some bullish price movement here, and you can see that it's been negative the entire time. Let's go back to before this. I mean, that would have been your signal to buy. The price came through all the major moving averages. We got multiple golden crosses here, went all the way up, and you might have even got out in time. So that would have been a great time to buy there if you saw this here. But what we are seeing here is that the price broke below all the major moving averages, but now you can see that it's broken above the 50-day and the 100-day, and with the 200-day incoming. So I think the technicals there do look like a buy on the moving averages just due to this price movement. The next thing I like to look at is the RSI and the MACD, but what we'll do is we'll look at the MACD first. You can see here what we want to do is look for bullish momentum, and look, oh well, the problem is this is such a big, we'll take this out of the way just so we can see, and the MACD is currently on a positive swing. It changed at earnings and it's bullish, and well, it's going past, and also this is the first time the MACD has been positive 0 since that massive move back in November to March. So MACD is also saying it's a buy right now, which is obviously good to see. But this has unfortunately really skewed all of the numbers because we've got this massive negative momentum, which has really dropped everything. It would be good to see if we can get this out. Let's just have a look over the last 6 months and see what this looks like. This is a 2-hour MACD, and we'll try and change this to the daily as well. We can't really do it massively because it's still there. Fine. Well, let's just zoom in and continue with what we were doing. But if we just take it out, you can see that the negative momentum has really cost us. But it has been swinging to the upside and has been trading up. But even then, the price has still been going down. But this is definitely the highest price movement it's had, basically since the big jump up at the start of the year or the end of last year. And the next thing we want to have a look at is the RSI. So let me just get rid of this here. And the RSI is the relative strength index. Is the stock in overbought or oversold regions? And you can see right now, let's just take it out to the year once again. The stock was massively in the overbought regions here and then dropped down oversold and has been consistently oversold up until here where the price started to really slow down. And then it's hit this point and it's back in the overbought regions again. But this stock has been able to rise like this in the past. Let's go back to a little bit more in the past before this happened. You can see the stock was, if it was in the oversold regions, there was some good buying opportunities. Once it hits that oversold region again, that has been consistently a pretty good selling point actually. So RSI would be saying that you can buy this now, hold on for a little bit, and then you would probably want to sell or short the stock at that point, just because when it's consistently gone in the oversold regions, and this is going back, well, you can see here, bang, that was oversold, continued for a bit, drop down, oversold, drop down, oversold, drop down. Sorry, I said that incorrectly. Overbought, drop down, overbought, continued, drop down, overbought, drop down. So RSI seems to be telling me that this is not a buy because you would want to buy it and then short it. So it's never been in the overbought regions for quite a long time. So very interesting stock, discounted free cash flow and fair value, love it. But technicals on the moving averages and the MACD, love it as well. But the RSI is saying just be a little bit wary because the stock tends not to be in the overbought regions for quite a while. Right guys, thanks for watching. Please give a like on the video, subscribe if you're not already, and I will catch you guys next time.